This is the third video on NISM Certification Exam 5B Mutual Fund Foundation. In the previous video, we discussed what an investment is. And now since we know what a savings and investment is, now my next video, this is the video 3, we are going to discuss on what are the factors to evaluate savings and investment products. What does it mean? It means if we have a saving product with us or an investment product, on what factors or on what points should we evaluate these products? So the factor 1 or the point 1 is safety. We should see whether the capital which is invested in these products is safe or not. Is safe or not. If the capital, or the other name for calling capital is punji, if that is safe, we should go for that investment. The second point which we have to see is whether there is surety of income from that investment or not. Is my income which is to come from this investment, is that sure? These are the two safety parameters. These are the two safety parameters that you should look at. After looking at the safety at these two parameters, we need to understand how can things go wrong. That is called as understanding risk. So my question now is, how can we analyze safety? We can analyze safety, or we can understand safety when we understand risk. Now the question which comes to our mind, what is risk? Risk is nothing but what can go wrong. We have to list the parameters that can go wrong in our investment product. Whether our capital is safe or not in that investment product, whether the returns in that through that investment product is safe or not. So that risk analysis we have to do. I have done some risk analysis for you here. Let's look at that. First risk which we are talking about is bank insolvency. Here I say, in case of an FD, which I do it in the bank, and the bank goes insolvent, what happens? My FD is lost, or it is stuck till the time Reserve Bank of India merges that bank or instructs that bank to pay the money to the FD holder. So that is an issue. Second is, if we invest in shares, what happens? The share market price falls and the share value falls. So this is a drawback. So this is a drawback which we can have when we invest in shares. Now, suppose we are investing in gold. What happens there? There is a theft of the physical asset. If there is a theft of a physical asset, that is gold, then in that case, our gold is risky. So this is the risk involved with physical asset like gold. If we invest in real estate, if we buy a flat and we rent it out for a regular annual income, there is an eviction risk. What is an eviction risk? Eviction risk is you have given the house to your rented out the flat or the house or the property, and the tenants don't leave it. They don't vacate it. That is an eviction risk. They don't pay you the rent. That is an eviction risk. So these are the risks which are associated with each type of investment. You can see here that risk from an FD to a real estate. Some basic risk I have included. There are many risk parameters. Before investing, before evaluating what factors are there in terms of how good is your investment product, what factors is to be seen in terms of risk, please list these factors for each product and then evaluate them. Now, this is all for this video. In the next video, we will cover the factors to evaluate savings and investment product, which is factor 2 now. Thank you.